Everybody, I'm Gianni Di Poce. I'm going to be with you for the next hour. Today is Monday, the 6th day of what I have termed out of this world October. Well, if you are in the $1 Million Challenge and in the Trinity Trade, I think you might understand what I'm getting at when it comes to the million or that this out of this world October, because it's been a pretty exciting start to this week. I actually had a buddy of mine who texted me last week and was, throwing some semiconductor names at me. And he was like, "Oh, check out Marvel and this and that." I was like, "Honestly, I like AMD more." And then he texted me this morning before I had even looked at the market, and he said AMD, and I said, "Oh, what happened?" And turns out OpenAI uh, bought a big stake in Advanced Micro Devices. Now, the stock went up 30 some percent after the open, but last week I issued our monthly super lotto trade for the Trinity trade, and it was in Advanced Micro Devices. So we just bought a straight call option, okay? And within 5 days, the call, we closed it this morning for 389% in 5 days. So it was a very, very strong trade. That's back-to-back super lotto success because the previous super lotto was in Tesla. And, this is the type of environment that we're in. So we need to understand where we are in time, position ourselves. And, I was even getting the question, like, should we hold the call? Should we hold the call and hope for bigger gains? And my answer was an absolute no. No, because it opened significantly above our upside target. And if you were in that trade and you thought that, I want you to sit there and pause and think, what emotion did I just experience? Okay, so that's why my leading phrase of the day, my mindset memorandum is think before you act. Okay, because we woke up to this amazing news in AMD. I mean, we're talking the call was, 60 bucks in the money before the market even opened. 60 bucks in the money before the market even opened. And it was significantly above our upside target. And just the fact that I thought about it too. I was like, oh, what if the stock goes to 250 today? It could have happened. I'm human. I feel the same things that you do. We feel these emotions. We all feel the same emotions, but to varying degrees. And so what did we do? We just came in, we followed the trade, we followed the plan, we sold the open, 389% in 5 days. And that was another super lotto success. So yeah, I have been poked to get back into the options game. And we're dipping our toes in, dipping our toes. I have a framework in which I'm approaching these trades, and we're going to keep looking for the next opportunity in the options market. But yeah, I have a model that I'm working with within the framework of how we analyze markets, and there's very specific things that I'm considering. And I'm looking forward to sharing this in greater detail with Trinity Trade members. Kind of just like the theoretical framework that we're picking these off with. So yeah, that was a good start to the day. But what's crazy is like that was the story of the morning. The story of Sunday night was Japan and the Japanese Nikkei exploding to new all-time highs. We start every day looking at the currency markets in charts with our chart surfing, okay? And wait till you see dollar yen, USD JPY. If you have not looked at that yet today, that's the first chart I looked at. I didn't even look at AMD first because the market wasn't open. I just had the pre-market. I had some shares of AMD as well, but I can see how that's priced. But dollar yen, big move, big consequential elections took place in Japan. You have a leader that wants to go back to Abenomics. Okay, Shinzo Abe, who was the former prime minister, the late prime minister of Japan. He was assassinated a few years ago. But Abe, Abenomics, back in my early days of trading, that was a big phrase that was tossed around. So I thought Abe was a pretty cool guy. I'm fascinated by Japanese history and culture. I've not been to Asia yet, but actually Japan is my #1 destination. I know Professor was there this past summer, and that's the first place I would like to go. I'd like to go to like Hong Kong and Shanghai too, but Japan is the #1 place in my bucket list. But their markets are so important. We talk about all the time why the Japanese market. the Japanese currency market, the Japanese stock market, the Japanese economy are so key. You wouldn't think that this small country with, made up of a few islands in the eastern part of Asia, kind of like the border of the Pacific, was so important to the economy, but it is. It is. And there is a big shift happening. We've been highlighting the changes going on in Asia. Now, the thing is now is the dollar is getting a big rebound against the yen. So we're going to talk about those, what that means for you and for your portfolio. Over the weekend, I saw a lot of angry people when it came to quantum computing stocks. Okay, a lot of angry people saying this is a bubble. It's going to blow up. Take a look at the picture of this company's headquarters. They have no sales. Their CEO said this. Their CEO said that. If you didn't get a chance to read my friend and colleague's article, Brandon Chapman wrote a really good article on what's going on in quantum computing over the weekend. Read that. Read that. It should be in your email inbox if you didn't delete it, but check it out. And then ask Brandon because he's going to be on after me today. Actually, you know what? No, he's out of commission today because he's got some ghost print activities going on. But try to get your hands on that. Let me see if I can find it real quick because it was honestly such a good article explaining why. Let's see, because I have it in my one email inbox here. I'm not just going to scroll and try and find it while we're on this together, but really just broke down what's going on in the quantum computing sector so clearly within the framework of the options market. Within the framework of the options market, because I see all these people so angry about what's going on in quantum, and Brandon just calmly and coolly explained, hey, this is being driven by the options market. And, he looks at things a little bit differently than I do, but I think his explanation was actually really good. So let me actually send a message to the Theo team. Let me see. Oh, Brian Aponte. Thank you, Brian Aponte. Okay, so check out what Brian Aponte just shared in the chat. Very, very well explained. That's probably the best article I read all weekend. We also have Bitcoin breaking out, but there's an even bigger break. This is actually what I'm calling the most important breakout in the entire market. This is the most important breakout in the entire market. And we're going to dispel some myths around valuations and, oh, we've never been more expensive and you need to be concerned. We're going to look at things a little bit differently, take a different perspective, and I'm going to tell you why the tech sector is going to become 50 to 60% of the entire US stock market. Are you ready for that? Because right now it's around 30%. That's correct. I'm looking for technology to become 50 to 60% of the worth of the US stock market. And I'm going to show you the chart why. We're also going to take a look at what's going on in the real estate market with homeowner equity. A lot of doom and gloom on real estate. I kind of take the other side of that, but we do need lower rates, and we're going to address that within the context of how homeowner equity is a boon for consumer spending. When people feel wealthier in their homes and their stock portfolios, they spend more. And especially if rates go down, you're going to see more and more homeowners tap into their equity to get things done around the house, home renovation projects, so on and so forth. Okay, that spurs the economy. And of course, guys, it is Mid-Cap Monday, so I'm going to be taking you through what I'm seeing in the mid-cap space. But just a very, very exciting day in the portfolio. I mean, we might actually be having our best day ever in the $1 Million Challenge. Even in the Trinity Trade portfolio, I mean, just really big moves taking place today. So it's very exciting. And, this is the market environment that we've been talking about playing out. We need to see absolute euphoria. We need to see not just someone making money. We're going to see fortunes made. We're going to see people make fortunes. Okay. And you can make a fortune too. I want to be very clear. The difference, what's going to separate people, the real traders from the gamblers, is can you keep the fortune? That is the key. That is the key. I want you to just sit there and sit with that for a moment. You can make a fortune too, but can you keep it? Because you want to know why I'm here today? I did good during the COVID situation. That's what put me to another level, guys. I had COVID, the COVID market changed my life. The COVID market changed my life. But the reason I'm here is that when everyone blew up in 2021 and 2022, I did not. Right? So everyone made money in 2020 and 2021, but then people started blowing up in 2021. Most people blew up in 2022. Okay? But it's just like we had that drawdown earlier this year. You're going to have a drawdown. Are you ready for your next drawdown? How are you going to handle your next drawdown? This is why you need to think before you act, guys. We're not just coming in here shooting from the hip, revenge trading. You know, even Professor Bierman had a great article. I mean, just absolute fire coming from my colleagues this weekend. You know, he was talking about rewiring the minds of his students and, you know, the entitlement mentality. You're not entitled to make money in this business, and you're especially not entitled to keep the money. Okay? So that's what I have on the agenda for you on this fine Monday, the 6th day of Out of This World, October 2025. Let me see who's on the chat today. Welcome you all. I appreciate you joining me. Let's see. Yes, by the way, Beverly Hillbillies, you know, my grandfather passed away in 2020 just before COVID. That guy was really my best friend. And TV Land, man. TV Land, whether it was Bonanza, Beverly Hillbillies, you know, Bonanza, Gunsmoke. Bonanza and Gunsmoke were the main ones. But yeah, you know, after high school, I come home and plop on the couch for a little bit and watch you know, TV Land with my grandfather. So anyways, all right, let's see who's all in the chat today. We have John G. We have who else we have? Roger and Callie, Les, Ed, E Combare, Si va a sonare. That's a good song. P Butts, you need my lottery winning numbers. Yeah, I don't have those. But all we're, you know, guys, like this is just risk reward, right? Knowing where we are in time, knowing when to hit the gas pedal, knowing when to pump the brakes, and you know, the model we use is dynamic. The more data that comes in, the model updates. This isn't like I'm coming in and saying, guys, for October, we need to be bearish, and I'm not changing my mind until the start of November. No, it can flip on a dime, and it did that at the beginning of September. What is the new stop on AMD, Ken? Yeah, we'll talk about that today. We didn't hit 230, which was the target, but we will discuss that. I know that, you know, here in chat we had the you know, the actual stock of AMD, but I love the setup so much. I said, hey, let's make this a super lotto trade for the Trinity, and it paid off. I took the trade in $1 million challenge as well. Roger, bro, Jackie J, SHP. Yes, good. I'm glad so many of you got into the AMD trade because, you know, as Brian points out in the chat here, says it was his best trade ever. Okay. It doesn't take a big portion of your portfolio to really drive outperformance. So if you're going to swing for the fences, you can do so with a smaller percentage of your account. And if you're right, it's going to impact your portfolio's return significantly more than if you were wrong, right? These are like asymmetric bets. Like, okay, my position size is a couple percent. I'm risking maybe half of that. I'm risking 1%. But then if I'm right and I make 400%, I'm risking 1% of my portfolio to make 4 or 5%. You see what I'm saying? That's really what trading is all about. And I talk about this all the time here. And it's a lesson that I had to learn the hard way in my early days because I didn't think like that. I didn't think like that, but it really changed how I approach the market. So I'm glad so many of you we're able to not just own the individual stock, but take the options trade as well. Frankie, bon lundi. Slap happy Monday. Yes. Nora, Steve. Good, good. The Rifleman was a good one. That was a good one too. Yeah, yeah. It was, but it was mainly, Gunsmoke and Bonanza, for me. Randy, Harry, Don Carlos, Scuba Tech, Rio, Tall Tex. All right, guys, we got a lot to do. We got about 45 minutes left, and let's go ahead and start surfing the charts. So we're starting off with USD JPY as we do every day, as we do every day. And look at what happened. It's not every day that you get gaps higher in the currency market. Let's call her Mrs. Abenomics. Okay. Japan is in a dire fiscal situation. And this is what we need to understand because we live in the US, we trade the US markets. Not all of us live in the US, but I'm assuming that, 99% of us here are trading a US market to some extent. Our situation when it comes to the debt and the government financial disaster is bad. It's very bad, but it's worse in Japan. Japan is on life support when it comes to their financial situation. And their new leader is going back to Abenomics, guys. We're going back to Abenomics. This means here, this is big. And this is why I've been saying, guys, I can't take a trade in currencies. I mean, look at what we did last week. We sold off, and now we gapped back higher. Isn't that amazing? I mean, look at the monthly chart here. It's still very early. If the dollar yen starts to climb higher, do you realize what this means? It means that one, the carry trade is back. But two, what do people do with the carry trade? They borrow yen, which is losing value. So they're actually doing some financial wizardry and transforming a borrowed asset or borrowed a liability that they borrow, a loan, which is a liability, into an asset. That's real financial wizardry, guys. By borrowing against the yen, which loses its value, and they're buying in dollars, okay? They're transforming a liability into an asset. Pretty amazing. Pretty amazing if you think about it. And this is going to be really good for US tech, guys. It also means that US stocks could start to make a comeback. I'm still all bulled up on China. Don't believe, don't get it twisted, guys. But take a look. Take a look at the Nikkei, the Japanese Nikkei. Absolutely parabolic. Huge move. Todd E asking a very good question. How does that make sense? Okay, so I want you to think about it this way. Let's say you borrow 1,000,000 yen, but you live in the United States. Let's say the yen drops 10%. Your loan obligation is still 1,000,000 yen, but your dollars in which you transact and earn money has gone up 10%. So the value of your loan based on what you're earning has gone down 10%. So because all you owe is 1,000,000 yen. But if you have to convert your dollars into yen to pay that back and your dollars are worth 10% more, do you see how the value of that loan has decreased? In fact, that was actually a really big thing. You know, I saw this as a kid, um, when I was in Italy. So Italy was always notorious for devaluing their currency, but back in the 90s, Italy had a massive currency devaluation. And when I was a kid, all these big fancy homes started popping up, like these villas, and I was like, geez, everyone here is rich. But what it was is a bunch of Italians that were living overseas or living in different parts of Europe. They borrowed the Italian lira, the lira collapsed, and they were earning, whether it was pounds or French francs or German Deutschmarks or dollars, Canadian dollars, American dollars, the value of their loan collapsed. So they were, they paid their Italian contractors in their lira, but it was like they were paying them pennies on their own dollars. So yeah, this is real financial wizardry, guys. This is high level finance. You're getting an insight, a glimpse into that world. But yeah, this is a really good development. Now, what's crazy is could we actually live in a market environment where the euro is going up, the dollar is going down against the euro, but the dollar is going up against the Japanese yen. This has been a scenario that I have been explicitly warning you about. It's unusual. It usually doesn't last long, but you can see this, the euro against the yen. The yen is the weak currency of the day. You look at the dollar against the euro. Yeah, the dollar is only up slightly against the euro, and you're well off the lows of the day. The euro is making a comeback. Okay. So this is a very interesting environment. And this is why, like, I've been kind of treading carefully on the currency front lately with you because it's a real funky environment. It's a real funky environment. Yeah, James says the more we continue to hold that and call it an asset, the more it scares me. Yeah, well, you know what's crazy is cash is basically an IOU, right? Every time they create currency, they're creating debt. I didn't make the system. I don't necessarily agree with the system, but that's the system that we're in. Crazy, 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 crazy. So yeah, the yen is getting clobbered, and the Nikkei is absolutely exploding to new highs. And the question is going to become, what does the dollar do against the euro? Because the yen is I mean, this is a bullish breakaway gap, guys. I mean, you're about to clear resistance. You get above this high from July, the carry trade's back on. Carry trade is back on. Very, very exciting time to be involved in these markets. All right, let's switch gears, jump over to bonds. Yeah, I was calling for a low recently in bonds. We may still hold that low, or there's still time to form a bottom. So I'm not changing my stance. I'm just saying the timing might have been off a little bit, and that happens. That happens sometimes. But I'm also looking for a situation where perhaps the 30-year bond makes a new low, or maybe the 30-year bond doesn't make a new low, or the 10-year does. One of the two, I'm looking to make a new low, but not the other. So I am looking for this to still continue upwards. So not really much to update you on the bond front. You're selling off a little bit. That's helping the dollar strengthen today. But again, I am bullish on bonds. I do think rates are coming back down. And let's talk about the consequences of that real quick. So let me go ahead and actually jump over back to my slideshow, talking about where real estate fits in, right? So believe it or not, U.S. homeowner percentage equity in their real estate holdings is the highest since the late 1950s. This was the real global financial crisis, guys. This was the real estate crisis, is how we were in a bearish trend. What was this trend doing? Since the mid 40s, we saw U.S. homeowners percentage equity in real estate holdings making lower lows and lower highs. Now, what changed? Well, there's less mortgages on homes now, right? A lot of the homeowners are of the boomer generation, right? You retire, you pay off your home, and you start focusing your equity portfolio, and then you end up here at TheoTrade, right? That's the way it goes, right? But I would explain this a lot through demographics. Because we have an aging population, first-time home buyers, the age of first-time home buyers is rising. And as a result, there's more and more equity in people's homes. Okay? So there's less people owning homes. The people that are owning homes are older. There's more cash transactions taking place in the real estate market. We're not going to see a big real estate crash like we did in 2009. Okay? In fact, the only other time really in history that a real estate crash like that happened was during the Great Depression. So the Great Depression wasn't just stock prices collapsing and not recovering for 20 years. It was also real estate markets collapsing. Go look at the Florida land bubble. That was a big part of it. Ben Bernanke did his thesis on this back in college. That's why they did quantitative easing. These are once in a generation, once in a lifetime types of events, maybe twice in a lifetime. So was 2009 the event? Was it the real? I do think it was the real estate event, but I'm not so sure that it was the equity event. I think we kind of saved the real estate market, or I should say save the equity market. But I mean, real estate prices, look at that. Look at when they bottomed, 2012, 2013. Okay, and they've been climbing. I mean, this is an explosive rally. So what happens now if interest rates come down, well, people that need a new roof, people that need new siding, people that need a new driveway, people that need to expand their homes, people that need to build, an in-law suite in their homes or whatever, they're going to tap into their equity. It's not really appealing to, hey, borrow money against your home at 9%. Well, you get it down to like 5%. Okay, now we're talking. So Tim, yeah, okay. So Herb says hedge funds own a lot of residential real estate. That's true. I don't know if I even necessarily support that. Just my millennial opinion there, I guess. Um, I've been in my home now for over 5 years. I'm one of those that got one of those sub 3% mortgages. I'm not moving anytime soon. But Tim says, need a real estate crisis to reset what is affordable to average citizens. I should have got that graphic. I see sometimes people saying, oh, we would need wages to rise 50% or interest rates to fall to 2% or real estate prices to drop 30% just to get back to the affordability of 2020. Well, you know how markets tend to work. You're probably going to see a blend of the three. Okay. So if wages, I actually do think wages will continue to rise. If wages rise 20 to 30%, okay, not 50%, and prices, real estate prices only start increasing maybe a couple of percent a year, that's kind of what I think. Real returns, I think, are going to be capped because I think inflation is actually going to outpace the value of homes. The thing is that real estate and property has historically shown to hold its value very well during periods of inflation, which I think will come back next year. And then I think interest rates are going to come down. So affordability will get better. But you realize that the more that homes are affordable, the less likely that prices are going to come down. So I just don't think that real estate is going to be the place to build wealth necessarily over the next decade or so. I think it's going to hold wealth, kind of like gold and silver, right? I don't think it's going to build wealth. There's a big difference. I think you will build wealth with stocks and crypto. And even crypto, I think crypto is going to get smacked in the mouth next year at some point. Stocks, good chance, but it's not going to be as bad as in crypto. Okay. So you have to understand that different asset classes go through what's called secular trends. These trends last for several years, they last for decades. Real estate's had a really good run, really for the last 30 years. Since the 90s, real estate prices have been going bananas. Okay, that's not going to continue forever. Okay, and you could say, oh, well, stocks as well. Guys, stocks did nothing from 2000 to 2010. We're only about 15. I mean, the NASDAQ didn't make a new all-time high for 15 years. We looked at that last week. Okay. So this is why you need to consistently tune into these sessions, right? Because we're actually looking at historical data, looking at long-term trends, short-term trends. Where is the money flowing? The money's been flowing into stocks. So stocks probably have another, maybe 3 to 5 years of really good gains. And yeah, we're going to have 20 to 30% dips along the way. Okay. And then there's probably going to come a time where stocks go through another lost decade, but we just came out of that 10 years ago, right? The NASDAQ's hitting new all-time highs, but it took 15 years. The NASDAQ didn't hit a new all-time high since March of 2000. It took until 2015. It's only been hitting new highs for 10 years. Okay. So yeah, I mean, we get the NASDAQ keeps hitting highs into 2029, 2030. Yeah, I'm going to start saying we all got to become bond traders, guys. We're all going to become commodities traders. And that's okay. And that's okay. So real estate equity is high. This is not real estate crisis levels. And then you have the commercial real estate delinquency rate, which is higher now than it was in during the financial crisis. Guys, this like the rates are coming down. This is serious. But look at where I know I'm comparing kind of apples to oranges here, but it is all connected. Look at where homeowner equity was in 2010, 2013 compared to delinquencies now, right? Like it's just totally different. Like we're not in the same environment as we were before. Okay. So that's what I got on the bond front for you and interest rates. It's all very important because there's a lot of hysteria out there, and I don't like hysteria. You like to be calm, cool, and collected. You're gonna make better decisions that way. Crude oil, a little bit of a bounce today, already off the highs of the day. went out near the lows of the week. I'm looking for this to just get absolutely smacked to the downside. Again, we're in a war now, drill baby drill versus print baby print. And I think right now, drill baby drill is going to win, but eventually print baby print's going to win. Okay. So, that's what's happening in oil. Really not the best opportunities from my standpoint. Looking for this to break down and drop, at least into the, mid 40s, low $50 area. Let's go ahead and pivot over to stocks. Okay, S&P's at the high of the day. We did hit new all-time highs on Friday. The NASDAQ is at a new all-time high. It's leading the rally higher, unsurprisingly, given the advanced micro devices news. Dow has not hit a new all-time high, but it is down slightly off the lows of the day. Semiconductors, I mean, we talk about semiconductors every day, guys. We talk about it every day. This market's not going to roll over when the leading indicators of leading indicators is exploding to new highs. Okay, so AMD, we had a target of 230 on AMD. So let me just double check this. Oh no, we had 325. I apologize, 325. 230 was that was the $1 million challenge target for the shares. But I don't need two. I don't like when it does that. That alert back. So we still have that target of 320 on that swing long, and I mean, it looks like we're going to get there, guys. It looks like we're going to get there. So we'll probably be holding this for a while. The stop loss, I mean, we're going to raise that later this week. I mean, I really wouldn't even worry about it today, because if we crash like this, we got some other issues. You will hear from me if something like that is happening beforehand. But AMD just looks spectacular. And these are the types of surprises that happen in bull markets. Corey Rosenblum talks about this as well. He says surprises tend to happen in the direction of the underlying trend. I like surprises like this. I'm not a big surprise guy. My wife's like, oh, I'm gonna, what do you think about, what if I threw you a surprise birthday? Please don't. If you want to throw me a surprise like this, yes, that's fine. We still have that position open in Micron, doing well for us. NVIDIA, okay, 2 days off of its all-time high. Broadcom, very strong. No matter where you look across the semiconductor landscape, you see nothing but uptrends. Now, this will be the first sector to peak. Okay, it will be the first sector to peak. But let's actually look at the semiconductor index. Back in the let's see, you can't really see it that well. There's not that much data, but let's actually zoom in. So we're looking at the semiconductor index from 1998. Okay, this was the low in 98 to the high in March of 2020. Semiconductors went from a low of 182 to a high of 1362. So we're talking at least a 9x return in a span of, what is that, 18 months? 9x return in 18 months at the index level. At the index level. That's not individual stocks, guys. That is the semiconductor index. A 9x return in 18 months. That, my friends, is a bubble. Not a market that goes up 30% in 8 months. That's not a bubble. That's not a bubble. Mathematically, that is not a bubble. Okay? Now, could something like this be happening? I mean, maybe. And this is why I've been saying we need to be prepared for absolute insanity to come down the pipeline. Okay? So, again, chips are looking good. There's no reason to be bearish as long as that's happening. Let's take a look at Big Tech US. Apple consolidating near the highs. That looks bullish. Google hanging out near the highs. Don's been commenting on Meta. Yeah, that we need to see this support hold. I have been watching Amazon here. It does intrigue me some. Tesla had a nice rebound today off the lows. Was that a higher low? It could very well have been. This would further reinforce the uptrend. And all I'm saying, did my $500? No, it's still there. I have an alert here at 500. I don't know why it's showing it up there, but yeah, we have our target at 500 to take some chips off the table. And Tesla looks very strong. Okay. What's that event tomorrow, Rosario? Because they have their earnings coming up in a couple of weeks. But yeah, Tesla's looking great. We've been long Tesla for quite some time. I own this everywhere. It's very strong. I like it. Netflix has been grappling with some issues. We'll see if they can overcome that. And then Microsoft is another one I'm watching that's looking pretty strong as well. So, product announcement, tall text. Okay, I wonder what it's going to be. You know, that could be what sends them over the edge. Less expensive cars. Yeah, my kind of unpopular opinion of the future is I think that combustion engine vehicles will come to be seen as a luxury vehicle. I think that electrical cars are going to become cheap for the masses, mass produced, especially with all the used cars out there. Um, I will not be driving an electric car anytime soon as long as I live in the great state of Michigan. I will be driving a combustion engine because I'm not driving electrical vehicles when it gets cold. Okay. So, oh, Tesla rumored to be announcing a partnership with ACHR. I was looking at that last week. You can't trade them all, guys. You can't trade them all. You got to let some go, or else you're going to drive yourself crazy. So just focus on the ones that matter the most, okay? And just the strength of the setups because you're not going to get them all. Oh, not electric, but battery operated. Wow. Wow, how about that? It's pretty cool. Let's take a look at China. China is up today, not as much as the US. You take a look at KWeb. That's up nicely. CQQQ is it up more than QQQ? It is not. It is not. But still a pretty strong day in our coveted Chinese names, including Baba up mildly. Baidu hitting another new high there. Very strong name. Okay, we also have BYDDY that is trying to pair its recent losses, and even XPEV, nice rebound off of that sell-off from last week. So yeah, that's all looking good on that front. Let's see, I had some other good information to share with you. Let's take a look real quick at the quantum sectors because this is going to tie into my next discussion. Because quantum continues to make new highs. There's a lot of angry quantum bears out there. They're very angry, and for good reason. These companies don't really have earnings. In many cases, they don't have a product. But do you understand why I say, with the utmost seriousness, okay? Markets don't move based on facts, reason, or common sense. Get that through your mind. The more that you come to peace with that truth in this market, the better you will do. I promise you that. Stop pretending that markets move based on logic, reason, and common sense. The smartest people don't always do well. I guarantee that there are people in this chat way smarter than me, okay? Way smarter than me. I am not the smartest person to ever live. I don't pretend that, okay? That's one thing, being in martial arts and boxing, all that stuff has taught me there's always someone bigger, faster, and stronger than you. There's always someone smarter and with more money than you. That's okay. Focus on your own portfolio. Focus on your own account. But this weekend, oh, quantum's a bubble, quantum's this, quantum's that. Do you see the picture of this company's headquarters? It looks like a rundown laundromat. Okay. Okay. Fine. So yeah, Ken, they did another offering, QUBT. We did book profits on that on Friday, fortunately, but that's happened a couple times on this stock. That's how these stocks go. If you don't have the stomach to tolerate 10 to 20% reversals in a day in these quantum names, stay away from them. That's just how they are. QBTS still making new highs. I booked the rest of my profits on QBTS on Friday over in the Trinity trade, over 100% gain on the straight stock. If you want to start trading these names, these super lotto trades, these lotto trades with me over in the Trinity trade, give us a call here at TheoTrade at 623-244-5657. Again, the number is 623-244-5657. I did just drop the link in the chat. Okay. And it's not just quantum names that we've been hitting it big on. AMD. Okay. The story of the day, Tesla, that big pop in Tesla from a few weeks back. That was a recent super lotto trade. But again, the more I see people getting angry about quantum, and I was seeing this on social media as I saw Brandon Chapman's great article over the weekend. And I was like, wow, this is really hilarious because I see people so mad. Basically, and I told you this just differently. less elegantly than Brandon did. The more people short quantum, the more it's going to go up. Just to give you an idea of how silly this is, you have IonQ with a market cap of around 22 to 23 billion. Okay, compare this to Nvidia. Back when Nvidia was worth 23 billion, Nvidia had $4 billion in revenue. Okay, IonQ has 43 million. Nvidia had a profit of 400 million. IonQ had a loss of 333 million, but they're the same market cap. Which one follows logic? Which one follows animal spirits, emotions, fear, greed, euphoria, panic? That's what moves markets. And the beauty is that those emotions, I believe, my core philosophy in trading is that these emotions can be visually observed through the price action on the charts. That's why trends work. That's why patterns work. That's why price objectives work. When you get enough people into a room, you can measure within a margin of error what the group is going to do, what the crowd is going to do. Okay? I won't be able to tell you individually what you're going to wake up and do tomorrow morning. But you get 1,000 people in a room together, I can say within a high degree of probability and within a margin of error that I bet at least 30% of those people are going to have breakfast and a cup of coffee within an hour of waking up. Is that an odd that you would take? It's no different than technical analysis. It's the same concept. The same concept. And here's an update on the dot-com parallel. Okay? We're still I'm not an analog guy. I say it all the time. But this is why I've been trying to prepare you for an absolute mind-boggling, gravity-defying bull market in the next couple of years. Abenomics is coming back in Japan, baby. Running it hot. Every developed economy is going to try and run it hot. Remember, the European Union started cutting rates. The European Central Bank started cutting rates before the US, and Japan still hasn't. Now they just have fiscal stimulus coming back, and they're going to put pressure on the Bank of Japan to do the same thing. Did Europe move first, and now the US and Japan are going to follow? A very, very strong possibility. Now, here is the most important breakout today. This is happening right now. This is happening right now. So a lot of people, you've probably seen these charts circulating. Oh, the tech sector hasn't been this expensive as part of the S&P since the year 2000 before the dot-com bubble blew up. Okay. Well, if you're in the Trinity trade with me, we're looking at this chart, and I'm chomping at the bits, guys. I'm chomping at the bits to get more tech in my portfolio in looking at this. Because this chart that is breaking out, this is not a double top, guys. This is a breakout. The double top was last year. Okay? This was the double top test. You dropped, and now you're breaking out. Mark my words, tech is going to become 50 to 60%. You're going to see this chart go to 50 to 60% as a percentage weighting of the S&P 500, and people are going to deny it. They're going to cry about it. They're going to say it's a bubble. The stock market is garbage. Meanwhile, we're going to be on the other side making money hands over fist because we respect breakouts. We respect trends. We see the world around us. So it's up to you to choose. Do you want to sit and cry about, oh, tech is too much of the S&P? What should it be? What should it be? Should it be at 20%? Why? Should it be at 10%? Should it be at 30%? I'm not going to try and tell you what that should be. All I'm saying is I see a clean breakout. I see a price pattern on this. Okay? And it's happening. It's happening. So we're going to be on the right side of this trend. And I'm not going to tell the bears that they're wrong. Why would I? Why would I? I'm not here to be right, guys. That's really not why I'm here. It's not. So we'll see you on the way up to the tech sector, reaching 50 to 60%. Okay. So yeah, I'm not going to try and make rhyme or reason. I agree, guys. It's crazy. the AI stuff, the CapEx, this and that, quantum. I know. I know. I hear you. I agree. I agree. But that's not what the market's moving on. That's not what the market's moving on. Anyways, let's go ahead and finish our daily surfing of the charts. Let's go ahead and take a look what's going on in crypto because Bitcoin is also breaking out. Bitcoin at new all-time highs. This is very bullish. We're looking for a rally to 138, 140. Again, I have been saying and continue to say that I don't have much expectations for Bitcoin above 150,000. So we gotta be careful. I think we're gonna see a sharp sell-off after that. And you could even see, Bitcoin come back down, test, 107,000 after that. It could be a pretty sharp decline. I think that equities will do a lot better during that time. Ethereum hasn't even broken out yet. We now have Solana futures to look at as well as XRP futures. Very exciting if you ask me. I'd be keeping an eye on this. The fact that Bitcoin is leading the rally higher is a very good sign. Okay, that is what we want to see. And it's very bullish. It's very bullish when it does that. Okay, so we still have that trade open in HUT, which continues to climb to new highs. We did that target of 50, and then you got other names like, Mara, which you got ripsawed out of, but I am liking what's happening here in Mara too. I think it could finally catch up to Riot, which has been very strong. Okay, let me clean this up for you. Okay, so these names have been very, very good. And, I see some questions on BMNR. This is actually a $1 million challenge name as well. So it's looking good, guys. I mean, again, I think we're going into full-blown mania. And, this stuff, these pockets of time they're not all a year, right? They present themselves within a couple of months. So you really need to be engaged and you really need to be following your method. And then when the system hits, that's when you push the initiative. Okay. So yeah, I'm a crypto bull. Nothing's changed. Nothing's changed. We're about to see ETHA make a new high. We've been long Ethereum since April. Okay. So I hope you guys still have ETHA on the books, because aside from that, that's been the best trade of the year. Obviously AMSC has been doing pretty well too, but I think Ethereum may end up being better. All right, let's take a look at precious metals. I am just constantly bewildered at how strong metals have been. Gold's within spitting distance of 4,000. Okay. And silver is close to making a new all-time high. So let's see, we're like a buck away, I think now. Yeah, about $1.50 away. So it's really amazing to see this going on. I don't have any more metal mining stocks. I kind of wish I did. Do I have seller's remorse? Yeah, I mean, so you got to pick and choose your battles and your trends and your breakouts. Greeny, you still got AGI, very nice. But we had AG, we sold that for a nice profit nonetheless. It's okay. I'm not going to be upset about not being in every single big move taking place right now. But it does look good. I don't know where this settles, guys. This is kind of exceeding my expectations. We're due for a sharp sell-off. So we need to be careful. We need to be careful. That is still my stance on that. Okay, guys, let's go ahead. Let me check back on the equity indices real quick, just see what's going on. Are we still at the highs of the day? Pulled back just a little bit, but overall looking pretty good. Yeah, that looks solid. How's AMD intraday? Yeah, just chopping around there. Yeah, it's not like I didn't make money on miners. I mean, I could have made more, but I'm not going to spend time worrying about that in reality. I got to be on the lookout for the next opportunity because they're moving, they're coming. All right, let's take a look at some mid-cap stocks. We have about 10 minutes left together before we call it a session. Cipher Mining. This is interesting. SIFR. What happened here? That's up and away. It says it's a financial asset manager. That's a little odd. That is a little odd if you ask me. but that is a clean breakout, and I'd be looking for this to go to 20 bucks. No need to really chase that at this level. Centrus Energy just continues to climb. Planet Labs. Wow. Wow. How's Rocket Lab doing, by the way? Rocket Lab is breaking out to new highs. ASTS as well. Just incredible moves. I honestly, I didn't really do that well with these space stocks. I kept getting stopped out. Let's see here. QuantumScape Corporation, that one's been doing pretty well. Also, that's been on the TheoTrade watch list for a while. Arrowhead Pharmaceuticals keeps climbing. Yeah, biotech still strong, everyone. It's down a little bit today, but big things happening. Celsuity, that's still chopping around. VSAT, this looks pretty good, actually. Yeah, I like this. All right, let's see here. Do we have a trade on this name? We just may. We just may. Yeah, I think it could trigger today too. Okay, so got a target here. We'll do $47 target. Okay, and now for the stop. $29.62. Yeah, that's what we're gonna do. So okay. So here is a trade for today. Buy VSAT on a close above 32.92 with a stop loss on a close below 29.62. Target 47 to reduce. Okay, so we'll see if that one triggers today. I do like that setup. Peabody, a couple coal mining stocks I'm seeing on the bottom. Look at that. Yeah, it's crazy because the energy sector itself has not been doing that great, but coal stocks are doing good. Actually, energy is having a pretty good day. Kind of neck and neck with tech, but semiconductors are doing the best, which really is what matters. XLI, XLB, XLU had a nice pop over the last few weeks. Healthcare kind of quiet. Cogent Biosciences. You know, it's interesting how over the last couple of weeks, you know, I pay attention to this stuff, but I don't know if you've noticed. Um, um, but technology has always started off the week doing very well. So I think that that says a lot, and then it kind of fades into the back half of the week. Mighty R asking a very good question. Can you explain the timing of buying a close of a certain price? Yes. Well, we're looking on those types of setups. We want to trade around the closing bell because I need to see that stock above that certain price in order to initiate the trade at a closing basis. I don't want to own that stock below that price unless it's going to close above there. So you can either trade at the close, you can do, market orders around the close, you can do extended hours trading sessions. I kind of break that down in greater detail over in the Trinity trade, but yeah, it's a very specific type of setup that we like to do. And so we're basically trading around the closing bell. Let me know if that makes sense because it's very important. All right, what else we have here? Oh, some of these nuclear names. NNE having a day. Actually have that $1 million challenge portfolio from last week as well. So, Ken, have a good day. Thanks for tuning in. What else we got on this screen? NO data, this one's been moving nicely lately. NO data, it's been strong. But can't really take a trade there. Trying to look at some names that we don't, that we haven't seen lately. Oh, GSAT, I've been watching this one. I think this, yeah, this one's taken off. This is a beautiful breakout. Beautiful, beautiful, beautiful. It was on my watch list actually, but it's kind of gone. I don't know if it's going to go all the way back to that, guys. I don't think so, but yeah, it's up and away. Soundhound, we've been looking at that one too. Looks pretty good. So I like what's happening in Soundhound. Yeah, it looks like it's going to continue higher as well. AI still looks good. Just scrolling through this list. CRISPR, we took a trade on that last week. Let's see how this is looking. Nice rebound. Okay, so we'd actually gotten long here, sold off the next day, and then it's recovering. It's pretty normal way to do that. So let's see. Gaston asking about ALAB. Yeah, that was a really good trade for us before in the Trinity trade. Came within a few bucks of getting our big upside target, sold off, but now did make a higher low. Still looks bullish. Yeah, there's not really a good way for me to play this right now from a risk reward standpoint, but it does look very good. And I do think that this stock will be back in play for us sometime in the future, but just not right now. With that all being said, I need to get ready to turn over the reins to Mr. 10%, otherwise known as Blake Young. I appreciate you guys all joining me today. We had a really good session. We looked at the consequences of the moves taking place in Japan with their recent election and the move in the dollar yen, what that means for the carry trade, what that can mean for US tech and US stocks in general. We looked at the semiconductor setup and had another big successful trade on advanced micro devices. Took a look at technology and the big break, the most important breakout happening right now, I would argue, in this entire market. Not even an individual stock, not even an individual market. It's a ratio that tells us that technologies continue to grow as a percentage of the overall S&P 500. We also looked at cryptocurrencies breakout, specifically Bitcoin, and in the appreciation, the rise in homeowner equity and how a refinancing boom could inject a lot of cash into the economy. So that's what I had for you today. Blake is in the house. He's going to take you through the next segment. Let me make sure that you are the host, Blake. You are not. I will make you the host. How's it going today, Blake?
Good. And it was, as you saw, a lot of things kind of got close to the targets, then reversed sharply. So we had some wins. We had some. What's the line from Megamind? You remember that movie?
No.
So at the very beginning, he's giving his monologue at
Yeah.
Megamind is, and he's saying, he won some, I almost won others. But this is actually different. We're actually had some winners, some losers, some small wins, some small losses, but pretty flat. It's overall, but it's been still a good day. We're still hitting the levels, and we're going to talk about that long-term discussion of the monkey bars today. Before you leave, can I show
Yeah.
you something on before, since you're just talking about the yen?